Good day, everyone. We got a lot to talk about, not a lot of time to get there, so let's get moving. So, a few announcements. First and foremost, I did receive a list for Meet the Firms. So if you attended Meet the Firms, please check on Brightspace to see your grade that I gave you your credit. It's not an exact match, and I always have a few students that flip through the cracks that do attend Meet the Firms but don't get on the list somehow. So please check. If you did not attend Meet the Firms, again, it's not all hope is not lost. You still have the opportunity to do the extra credit assignment for the Career Expo coming up in just roughly 2 weeks. It's actually 2 weeks and one day from today. So I encourage you to attend that. Um, uh, Also, just for clarification, I think I've already mentioned this, but if you decide to attend both, I mean, kudos to you, way to be a go-getter, but you don't get an extra 5 credit extra points for both of those. You just get the one-time extra credit boom. That's it, which I know that's unfair, but life can be unfair sometimes. So this is not something that was going to directly affect anybody, but I did want to make the announcement. So if you were looking ahead to week eight, basically our schedule was going to be, we were going to cover chapter 17 on Monday. Then we were going to cover something on Wednesday, which I had not determined what yet. It was kind of to be determined. And then week eight, Friday, we're out because that's fall break. I did make a slight modification in the schedule. So we had some visitors last week from Meet the Firms, and one of our visitors was Andy Karcher from Spire Energy, and he really wanted to give back. And so I said, yeah, I would really like it if you could come talk to my auditing students about internal audit. So we made some arrangements. We're still finalizing, but it's looking like on Monday, October 7th, that they're going to be visiting our class. And I'll talk more about that as we get closer to it. Be a good opportunity to learn about internal audit since we talk only about external audit in this course. The timing is not perfect because we're not going to cover internal audit until a little bit after that, but you'll get some exposure to that and we'll have a little bit of real world impact discussion. I talked a little bit with Andy a few times and he's a fascinating individual, and some of the things that they're doing right now are really, really interesting and cool. So hopefully that'll be something that you find beneficial. Then on Wednesday, we're going to cover chapter 17. So I just moved chapter 17 back by 2 days. It does not affect the assignment schedule. Everything else is due at the same time. It's just a little bit about what we're going to be covering. I've already updated the syllabus on Brightspace, so the schedule should be modified somewhat. But if you had written that down painstakingly by hand and gotten all that notice, and I've made that modification, I apologize. It's a small modification, but it is still a modification nonetheless. I more wanted to announce that we were going to have out of class visitors that are going to be coming in a few weeks. All right. Today, we are wrapping up chapter 5, which means our last lecture before the first exam. So we talked a lot about some stuff last week, so let's go ahead and reiterate. So we talked primarily about management assertions and the evidence. And remember, I said it is not sufficient to make sure that you've got these memorized. If you memorize the words, that is the starting point. All right. So let's go ahead and make sure we can talk about the assertions and the evidence. And you've had some research in here already, so hopefully it should be somewhat familiar, but let's go ahead and review. So management assertions, we have our big three assertions. What are those called? Completeness, existence, occurrence, valuation, allocation, accuracy. All right. I said something about completeness and existence, occurrence being directional assertions. One moves from bottom to top and one moves from top to bottom. So which one moves from bottom to top? That's completeness. Yes, that checks to make sure that we look at the source and see if it actually hits the record. Because remember, completeness is our recording assertion. That would mean that existence occurrence moves from top to bottom. We start with what's in the system and we move down to the source documents to prove that something exists. VAA, valuation, allocation, accuracy, that's just making the items are properly recorded at their right value. It is another recording assertion, but it's more about the valuation of something that's been recorded. Then we had another assertion that is recognized by both PCAOB and ASB that has to do with assets and liabilities generally. What is that called? Rights and obligations. That's rights and obligations. They have right to recognize asset. They have the obligation to recognize liabilities, and to a lesser extent, stockholders' equity. Then we have some assertions that are only recognized by sanctioning bodies. One is recognized only by the PCAOB. It has to do with presentation on the financial statements. What's that one called? Give you a hint, I just used the word unintentionally. Presentation, yes, presentation. Then we have two that are recognized by the ASB, the Auditing Standards Board, which is a subset of the AICPA. One of them has to do with making sure things are in the right accounts. What's that called? Classification, and then we have one that's a recording assertion, but recording in the proper period. What's that called? What's the assertion that's not an assertion? That's authorization. It will not be tested as an assertion on the exam, but maybe listed as an assertion in some of your assignments. All right, good. So those are the assertions. Then we had a whole bunch of different evidence that we can use to test those assertions. We're going to drill down deeply into that here in just a little bit, but let's just quickly go through our 11 types of evidence. We got accounting records, so that's inspection of records of documents. There are two special types of this accounting records testing. There's one that tests existence occurrence. What's that one called? Vouching, good. Then we got one that tests completeness. What's that called? Tracing, very good. Okay, that's one of our most valuable types of evidence collection because it can be used during any phase of the audit. There are two others that can be used during any phase of the audit. What are those called? Observation and inquiry, observing processes and people performing those processes and inquiring of people in the entity. They are very, very versatile. They can be used during any phase of the audit, but what's their relative reliability? Very low because people can lie. People can do things that they shouldn't be doing. So we got that. All right. So let's go ahead and go to the other end of the spectrum. We've got very high types of tests. Okay. One of these involves looking at a big asset and saying, look, it's right there. What's that called? Inspection of tangible assets. It's usually used for property, plant, and equipment, such as land, buildings. Okay, it's a very, very potent test, but really only, we'll get into the assertion that it tests, okay, because that's a limitation of it. Then we've got our re types of tests. What are those called? Recalculation and reperformance. Recalculation is redoing the math, redoing the calculations associated with it. Reperformance is redoing the test work, okay, making sure that that fits. All right. Then we have some assertions that fall, or sorry, evidence that falls right in the middle. Okay. We have a third-party request. What is that called? Confirmation. Yes, very good. And then we have the one that what's that called? When we actually develop an expectation, or we look at a trend over time. Yeah, it's called analytical procedures. And I'm trying to make sure I didn't miss one. I think I got them all. Yeah, it's only 10. Okay. For some reason, I keep counting 11, but it's only 10. All right. So we're good. We're going to revisit those at the end of our discussion. And everybody had the one that was assigned to them, and they're going to have some talk about it. Again, it's the only time during the semester I go Socratic method on everybody, but I do think it's an important interaction. However, before we get to that, we need to wrap up chapter 5, and we're going to talk about documentation. Now, the good news is what we're going to talk about with documentation is kind of the solidification. You already have some experience with documentation. Remember, I have referred to these assignments that you're doing at the end of every homework assignment. I say EWC working papers. Working paper is just a fancy term for documentation. Or work papers. Work papers is also a term. So they're used synonymously. In fact, you'll hear that audit vernacular if you ever work in an auditing capacity. They will use the term work papers or working papers. And all that means is that it's just documentation to support the audit. So audit documentation serves 3 basic functions, and these are the 3 critical functions of documentation, which you need to know these. So I strongly recommend that these underlined items that you are very familiar with, because these are going to be very relevant moving forward. So first and foremost, to provide the principal support for the representation in the audit report, the auditor was conducted in accordance with generally accepted auditing standards. Now, we haven't really talked about GAAS, generally accepted auditing standards, but these are a certain quality control guidelines that dictate the conduct of the audit. Now, the reason I don't cover them is because they're not critical to know for how to perform an audit, but they're critical to understand how an audit should be conducted with respect to quality. So we need to make sure that our documentation supports that the audit was conducted in accordance with generally accepted auditing standards. It also needs to aid in the planning, the performance, and supervision of the audit. So basically, during our planning parts and all the things that we do to create the plan and the strategy for the audit, we need to make sure that we've got documentation that supports all the plans that we made and all the goals we wanted to achieve over the course of the audit. And then also provide the basis review for the quality of the work by providing written documentation and evidence supporting the auditor's significant conclusions. So somebody who looks at our work and says, you came to an unqualified opinion, how does your documentation or how does your testing support that? The documentation should show somebody who's reviewing our work how we came to our conclusion. So again, all trying to move toward a certain direction. When we issue that audit opinion at the end of the audit, our documentation should point in that direction. Now, there's some critical things that we need to understand about documentation. Some of this is a little bit more fluffy than others. I'll get down to the nitty-gritty and tell you the most important stuff, but I do want to go through kind of the high-level points real quick. All right. So since it's the principal record of the audit, it's principal record audit, because the documentation provides principal support, it should provide information regarding auditor compliance with auditing and related professional practice standards. So we're going to talk a little bit about the rules that auditors have to follow. We're going to get into a little bit of detail on that. After the second exam, we'll talk about the code of professional conduct that dictates the behavior of individual auditors. At the end of the semester, there will also be some presentations, presumably on PCAOB and ASB guidance. But the audit documentation shows that everybody followed the rules of the profession. That's kind of the first goal. Secondly, provide the basis for the audit conclusions concerning each material financial statement assertion. It's consistent with what we just talked about. The idea that whatever conclusion we reach, the documentation should point to that conclusion. And any evidence underlying the accounting records agreed or reconciled with the financial statements. So we're going to talk a little bit about what that means, but when we have the documentation set up, it's going to be organized in such a way that the accounting records that we used as our baseline assumption will be presented first. And then all of our documentation subsequent to that will refer back to that original documentation. So usually the documentation starts out with the trial balance, and then everything after that is support for whether the trial balance is correct or it's misstated. All right. You all remember the trial balance back from 220. It's basically the previous or the first document that we used to actually create the financial statements. So it's a reason it's called trial balance, is because it's unproven. Well, we use that as our principal support for the year under audit. Okay, that's what's used to develop the final financial statements. So audit documentation should enable a reviewer with relevant knowledge and experience to understand the nature, timing, and extent and results of procedure performed, evidence obtained, and conclusions reached. So anybody who has knowledge of an audit should be able to look at the documentation and say, I understand how they reached that conclusion. I understand why they perform the procedures in a certain way. Everything is very clear and transparent to me. We also want to determine who performed the work and the date such work was completed, as well as the person who reviewed the work and the date of such review. This is an interesting point that we have not talked about, but let's think about those earthware assignments. In fact, I can open one up. I think I've got one here. All right. I was not prepared for this. I just kind of thought about it. So yeah, we got our inventory testing coming up. So yeah, inventory testing is going to be part of your assignment. So these are example of, okay, fine. Oh, great. Come on. There we go. So this is what we're going to be doing for Friday. Now, I'm not going to go into what the process is because it should become apparent once you work through it, but this is an example of a working paper, a piece of documentation related to inventory testing. Now, interestingly enough, we've got this box up here, and presumably you should be filling this out and putting your initials there. Why do we have this information? Well, we're going to talk about what this represents here in just a second. This should be your initials, and this should be the date that the procedure is performed. Why do we want that information? Somebody who's reviewing the document said, okay, there's a mistake here. I need to talk to whoever prepared the documentation, which would be you in the documentation, and understand when that was performed, what the date was. We don't really go far enough in this documentation because there should be more lines down here that also show your manager, their initials when they reviewed the documentation, and the date they performed the review. That's consistent with all documentation. And it's consistent with the elements of documentation we're going to talk about here in just a little bit. So the form content and extent documentation depends on factors such as size and complexity of the entity, the identified risk and material misstatement, the nature of the audit procedures performed, and other factors. Basically, all that's saying is the amount of documentation that you need in a certain area is conditioned on the characteristics of that area. If it's a massive account on a massive entity, you probably have multiple pages, multiple tests that are going to be performed in that area. If it's a small account, then there's probably minimal work in that area. So the level of documentation is going to vary depending on the nature of the accounts that you're testing and the entity you're performing testing for. So what are some examples of documentation? We don't really need to go too much in depth on this because you do have already looked at examples of documentation before for the previous chapters, for chapters 1, for chapter 3, for chapter 4, and then for chapter 5. We're also going to look at it for chapter 6, and then probably for our process chapters as well. So we're going to look at a lot of documentation moving forward. But let's talk about some categorization of documentation. Audit documentation is generally categorized into two methods, okay? Or two different areas. First is the current file, and the current file is just as it sounds. It's documentation that is relevant to the period under audit. So examples of this, the financial statements and the audit report, the audit plan and programs, which we've looked at before, copies of the excerpts and minute of important committee minutes, the working trial balance, adjusting and reclassification journal entries, or working papers supporting financial statement accounts. The way to think about current file is that is documentation that changes from period to period. It is not consistently used from period to period. It's going to be something that's variable. Now, contrast that to the permanent file. The permanent file is documents that are relatively static, relatively stable. The term relative kind of going to be useful there. That doesn't mean they do not change. It means they do not change in significant ways. So examples of the corporate charter, the chart of accounts, the organizational charter, important contracts, documents on internal control, terms of stock and bond issues, and prior year's analytical procedure results. So what this is differentiating is saying that if we have items that we know are going to need to be updated every single year, then we need to include those in the current file. The other items, they do need to be updated, but just for the changes that have occurred from period to period. I'm not saying permanent file items do not change. They do not change significantly. That is the big difference there. All right, this next slide is, in my opinion, the most important takeaway from documentation. Documentation generally has 3 general characteristics. Now, some of you are going to argue with me and say this is 4, and that's splitting hairs because I do believe it's 3 because the 2 that are listed together are related. The first of these are going to be the heading, okay? So the heading that goes to the top of the working paper and basically says, this is what the working paper is for. So let's go back to that document we were looking at. So we have the name of the client, we have the name of the test, inventory Florida sheet test counts, and the date. In addition to the heading, we also have these items over here that we were just talking about. We've got this right here, which we're going to talk about what this reference means here in just a second. The names, the initials, and the date, as well as review initials and dates as well as here. Now, there can be actually multiples of these here. There can actually be the manager review and the partner review. So that could actually be a long list of items there. But heading, at the very bare minimum, needs to contain the client name, the name of the test, the date, the balance sheet date, as well as these items that kind of list who was working on the paper and where the work paper reference comes from. Next item, we need to have indexing and cross-referencing, okay? So what is indexing, first of all right? The answer is, remember in that right-hand corner, that 5-1, that's an example of an index that's used. Now think about this in context to how you do referencing before. So let's say that I mentioned something in class and you don't remember what chapter it was, you don't remember where it's in the textbook. How are you going to find it in the textbook? Are you just going to read the entire textbook until you find that blurb that I talked about in class? No, you're going to go to the table of contents. You're going to say, what was the page number that I used, that the references, or the section that is the references, and you're going to go to that section and look it up. That is an example of indexing process, is that you use kind of a shorthand notation to show where something falls. This is very important because we don't just throw documents into the working papers willy-nilly. We don't just say, all right, finish this document, slam it in there, okay? This was on assets, the next one's on expenses, this is liabilities, and we don't just throw them in order, in a random order. They are sequenced in a logical order, so that anybody who's looking at the working papers can say, all right, I need to look at the information about inventory that was in section 5, because I remember section 5-1 was the test counts. All right, that's an example of organizing for purposes of indexing. There's also this item called cross-referencing. So remember, what was I saying before about the order of the working papers? What's at the very beginning of the working papers? The trial balance. This is what we as the auditors are ultimately trying to prove, the information that's going to go into the financial statements. So we're going to look at the line items for inventory, and we're going to say inventory has a value of $10 million. Then it's going to have a sequence of numbers next to our sequence of references, I should say, of notations next to that number. And all of those notations will refer to working papers that refer to inventory. So if I were to go to my trial balance, I would probably look at the trial balance and there would be a notation 5-1, because that's a working paper related to inventory. And then I go to that working paper and I look and I see, all right, somewhere within this working paper, there's probably a reference to the trial balance. There's not, there should be a reference to the trial balance where we're actually testing these items. Basically, it's what we referring to one another item. We refer to the item that's in the financial statements that we're trying to test, and then we refer back to the working paper that's doing that direct test. Those are called cross references, okay? They should always exist and provide clarity about where information originated from and where we perform the testing for that information. So that's what we mean when we call it cross-referencing. And then tick marks, okay? Those are when you go out in the woods and, like, you got to get rid of those things, but they bit you. And anyway, hopefully you don't have that problem, okay? Ticks are really, really bad this summer. So I heard. I tried to stay out of the woods. No, tick marks, this is basically shorthand notation. So has anybody ever watched the opening to The Simpsons? Okay, how does The Simpsons begin? Bart is up against the board and is writing down sentences over and over again. It's always a different sentence. So think about if we had to test 100 items and we had to actually document what we did to test 100 items, and we did the same thing over and over. We would have to write down the same thing 100 different times. Now, which is more efficient, to write it down once and use a symbol to represent that particular task, or to write it down 100 times, that longhand notation? Obviously, writing a symbol down one time and documenting that and then using that symbol over and over again is going to be more efficient. That is what a tick mark is. So a tick mark actually, and I don't think we have it in this particular piece of documentation, which is unfortunate. Yeah, we don't have the tick marks in here, but imagine that I tried to actually say, here's what we did to perform this test, and then I would use a symbol, like what would be an example of symbol? Let's see, I think it's under insert. Yeah, I'm going to use the symbol. Oh, no, I didn't mean to do that. I was trying to use the pi symbol because I wanted to be clever, and then I got distracted. Let's try again. Okay, symbol. All right, so I'm going to use this delta symbol. Okay. Oh my gosh, I'm just losing it. So, okay, I apparently I have no control over the worksheet. Okay, well, losing it. Imagine over here, imagine that I have over here that delta symbol, the triangle. And then down here, I've got a triangle and it says, this is where I performed Florida sheet testing to make sure that the inventory matched the documents that I was testing. I'm not going to explain that because it's part of your assignment, but in detail. But basically, it explains what the task performed was. And then for every single time we perform that test, we provide that tick mark. Now, what happens if the tick mark is not? It means that there was a deviation from that particular task, that something went wrong, and so we have to investigate further. This will become commonplace in your future assignments, as you will have to actually document what it is that you did in a particular instance, and then what the result was of that particular test. And that's how we utilize tick marks. So you'll see those a lot more in the future. I think we've seen them a little bit already, but you'll see a lot more in the future. Also, when we talk about documentation, the Sarbanes-Oxley and PCOV standards require that audit documentation be retained from 7 years from the date of completion of the engagement, unless a longer period of time is required by law. I was actually meeting with a partner from Meet the Firms, partner from Rubin Brown. Did anybody meet with Tim Johnson when he was here? Nice guy. So we were talking a little bit about documentation. He was just saying, yeah, it's a little bit different from paper-based systems that were in play in the 1990s and 2000s. Now we just put it on a database and we just hold it for 7 years and then delete it after 7 years. So in general, most documentation will be held for 7 years because it needs to be held for review for any particular purpose. The only time that's different is if something is required by law to hold it longer. Usually that's in response to a subpoena or a legal summons. So an example would be, so somebody comes and investigates and say, hey, Enron company, your numbers don't seem right. We're going to review your work. And so they would actually want to hold that documentation on until they've resolved all the litigation. I would assume that anything that Anderson didn't shred is probably going to be held till infinity, to be honest. I don't think that's ever going to be deleted. So that's an example of the completion date. So what is the completion of the engagement? Usually it's the date of the audit report, although that can also be the date the field work is substantially completed, one of the two. It's not particularly relevant, but it's important to note. And that's pretty much it for the high level discussion of documentation. So let's go ahead and talk really quickly about analytical procedures before we do our wrap up discussion. So analytical procedures are a powerful and versatile method for collecting audit evidence and obtaining assurance. And they are often utilized at different phases of the engagement, okay? Risk assessment, substantive testing, and near the end of the audit. Now, there's an important thing to note here. The most frequent occurrence of use for analytical procedures is going to be during substantive testing. And substantive testing usually involves the use of models, which we'll talk about here in just a second. However, the only times that it's required for testing is preliminary analytical procedures, so during risk assessment, and for final analytical procedures, which is going to be during the completion of the audit. So even though it's not required to be used during substantive testing, that's when it's used most frequently, but it's required to be used during the other two phases. Now, the reasons are a little bit subtle. Okay, for preliminary analytical procedures, we're trying to get an understanding of what areas of the audit we want to focus on. For substantive testing, oftentimes we're trying to get assurance that we can allow us to eliminate other tests in certain areas, which, well, like I said, is usually often frequently involves models. And then for final analytical procedures, we're trying to look and just make sure that everything makes sense. Trying to do wrap-up work to say, okay, the relationships are consistent with what our expectations are based on how we conducted the audit. So analytical procedures can vary greatly in scope and complexity, but generally fall in one of three categories. The first two are a little bit overlap. So trend analysis, the analysis of changes in account over time, and then ratio analysis, relationship between financial statement accounts or non-financial data. One of the very frequent preliminary financial procedures you'll run is you'll look at something like gross profit percentage, and you'll see how did the gross profit percentage change over a 5-year period, which would be both a ratio analysis and a trend analysis. Now, these should be fairly familiar for those of you who have done financial analysis in your previous classes, which I'm assuming everybody in this room has. You have had to do a project in 221, most likely, and probably projects in your finance classes as well. The third one is a little bit more subtle. This is called a reasonableness analysis. And this involves involves forming an expectation using a model. Now, make a note of this. This is what I was talking about for substantive procedures. This is usually when we will use reasonableness analysis. Basically, what we're trying to do is we're trying to develop an estimate or an expectation for an amount, and we're going to compare that amount to what the client has recorded. If those numbers match, then we're like, great, this is exactly what we expected it to be, so we can be happy. Now, spoiler alert, exact numbers very rarely happen. So we're going to talk a little bit about how we can develop an expectation and when that expectation is useful. So basically, for substantive analytical procedures, this is the model usage in substantive analytical procedures. There's going to be a very specific pattern that we follow down. So we're going to develop an expectation. We're going to develop this thing called a tolerable difference, which will define what that means here in just a second. Then we're going to compare our expectation to the recorded amount. So we're going to create an expectation. We're going to compare it to what the client says the number is, and we're going to make a determination, is it close enough? And that's going to be based on our tolerable difference. If the difference is greater than the tolerable difference, if it's within the tolerable difference, generally speaking, we as auditors can say, that's great. That is close enough to what we expected it to be. We don't have to do any further testing. I don't know about you, but if I can do less work versus more work, I'm on the less work train, okay? That being said, I was not a Truman student, so I'm a lot lazier than you guys. So that's going to be a truth that we have to accept. So what about if the tolerable difference is greater? Then basically that's where we say we have to do more testing because we have to understand the reasons for the difference in the test work. Sometimes we can get a little bit of an understanding and we get enough of an understanding that we can get an explanation. Oftentimes what it means is we basically can't rely on our model and we have to get additional assurance through additional testing during substantive procedures. Remember we were walking through the phases of the audit and I said, we start with substantive procedures, we start with substantive analytical procedures, and then we move to substantive test of details. The reason for that is that during substantive analytical procedures, if we identify areas that we have to expand our test work, that is when we would do that step. Okay, so we would say, this expectation is not close enough. We need to do more testing to understand the reason for the difference. All right, let's go ahead and talk about this thing called tolerable difference. So it's usually lower than tolerable misstatement unless it's an entire account. If we're testing the entire account, then they're usually the same amount. Now remember, tolerable misstatement is what we allocate for materiality to a single account. All right, and it varies between accounts, so we have to know what the misstatement is for that individual account. Generally speaking, we're going to use a rule of thumb for tolerable difference. And this is something that you will consistently use. And whenever we do these analytical procedures in this course, it's going to be 5% of the entity's recorded amount, not to exceed tolerable misstatement. Now make a note of this. The 5% of the recorded amount, that will be our guideline for this particular course. For other courses, or for other instances, such as the CPA exam, they may give you a different guideline. This is going to be your default for this course. 5% of the client's recorded amount, not 5% of our expectation, 5% of the client's recorded amount. Unless you get different information otherwise, that's what you should always assume when evaluating tolerable difference. So how do we utilize this? All right, so let's work through a comprehensive example. And this is a very simple comprehensive example, I'm going to tell you right now, this example is a lot easier than the one for your homework. For the homework, I encourage you to crank out the spreadsheet because you're going to need to actually create some tables to do the calculations. We're going to challenge your analytical ability. Okay. So Earthware's 2021 income statement shows $983,000 of interest expense. To conduct a substantive analytical procedure for this account, the auditor could develop an expectation of using reasonable analysis by doing a couple things. We want to get the ending monthly balance for a short-term line of credit, because remember, they're doing line of credit, not long-term debt. And we want to make sure we calculate the average monthly ending balance, which is pretty easy. We're just going to take ending values, add them all together, divide by 12. Okay, I think we can all do that. Can we all do that? All right. We want to determine the average interest rate by actually determining what the interest rate was over the trailing period, which is not particularly difficult. Then we're going to multiply the monthly average balance by the calculated average interest rate and compare that result to interest expense. Pretty straightforward, huh? So let's just do that. So here's the information from the general ledger on the right, okay? So these are their monthly ending balances. So if I add all this together, they're 230,900. And if I divide by 12, it comes up to 19,242, or actually technically 19,242,000 because it's in thousands. So that means that the average balance over the year was about $19 million, roughly $19 million, which if we multiply that times the interest expense, that should, or interest percentage, that should give us an expectation for interest expense, right? Yes, Dr. Barnes, you're absolutely right. 100%. I'm right there with you. All right, good. Okay. So interest rates recorded in the loan statements have remained stable over the year. They fluctuate between 5% and 5.5%. So what should I use as my interest percentage for the year? Anybody want to take a guess on this one? 5.25. Does that sound reasonable to everybody? Yeah, it's an average of the two. They fluctuate, so 5.25. Yeah, okay, 5.25. So what do we do if we get 19 million times 5.25? We get an expectation of $1,010,000. Now, if you remember, the income statement was 983,000. Okay, it's 983,000. So we're comparing 1,010,000 to 983,000. Is that close enough? What's the answer that you always ask in audit, or you always give in auditing, or any accounting class that I teach? It depends. What does it depend on in this situation? Depends on what the tolerable difference is. So we have to calculate our tolerable difference. 983,000 times 5% is 49,150. So these two numbers, 983,000 and 1,010,000, if they are within $49,550 of each other, we're good. Okay. So let's do the comparison. They are $27,000 apart, which is less than $49,150. We have won. We do not have to perform any additional testing. We go to the client, say, look, our number was not precise, but it was close enough that we think that your interest expense is reasonably recorded. What happens if this number is greater? If this is like 57,000, would I have a problem then? Yes, I would say this number is too large. It differs from our expectation too high. That does not mean the financial statements are materially misstated. It means that we'd have to do additional testing to understand why interest expense has such a substantial difference. All right, does everybody understand the logic behind that? Now, do you think you could develop expectations like this on your own? So say, for example, I wanted to do depreciation testing. Has anybody ever calculated depreciation in one of their accounting classes? Now, I'm assuming that if I told you the method of depreciation, the number of years, the residual value, and the basis for the asset, that everybody in this room could calculate depreciation for every single asset that I threw at them. What about allowance for doubtful accounts? Do you think you can calculate that? If I gave you the percentage on what's calculated, if I gave you the ranges and what the percentage range is, you probably could calculate that too. These are all things that you've done in previous accounting classes, develop expectations before, but from a financial perspective. If you replicate those as auditors, you're basically using work you already know to do a completely new task. So now do we feel confident that we could actually perform expectations on our own? Even if I've never thrown the analytical procedure, like if I threw a completely new analytical procedure at you on the exam, which I may or may not do you think that your exposure in previous classes would be sufficient to give you confidence in that area? All right, if you're gonna have a panic attack on me, now's the time, okay? Because I finished the exam already. So, all right. So this is what we're going to be doing: is you're going to be actually using this previous knowledge to develop expectations based on your financial expertise. So it's one of those few areas in auditing we get to do calculations, we get to do the math, and again, it's predicated not on the value that we calculate, but on that tolerable difference that we calculate. That is the key. Again, we'll get some more exposure to this on homework. We've got a very challenging assignment for homework, which you're going to have to put the thinking caps on, metaphorically, so to speak. All right. And that is it for documentation and analytical procedures. But we are not done, because I already told you that we've got our discussion assignments. So what does our discussion assignment look like? Let me close this and get my old spreadsheet, other spreadsheet up. Don't save. You were miserable. Okay. Oops. Okay, well, that's actually kind of something I was looking for, but I was actually looking for this right here. Did everybody find this useful? If you're looking at this and say, I'm not sure what that is, Dr. Barnes, this may be a rough experience for you, okay? This may be a rough go for you. If you're looking at this and saying, I use this for this activity, you're probably on the right track. If you did not use this, then we may have some things to talk about. All right. So we identified these types of evidence in the last lecture, and guess what? I have assigned every single person in this room to one of these types of evidence. Now, some of you have got multiple. If you got multiple types of evidence, guess what? You're sharing with another person. That's the good news, because you don't have to talk about all three items. But the bad news is those are also the most challenging and most relevant pieces of evidence. So I'm going to ask you a lot more detail. So let's go ahead and get started. We're going to start off, and I've got 3 questions for you. Okay, 3 questions for each one of these. What is the procedure? So you're going to have to define what the nature of that particular type of evidence is, which you can get that from the book. That's pretty straightforward. Which assertions can be used to test that type of evidence? Okay. You have to tell me if it's high, low reliability, high, medium, and low reliability, and you're going to have to tell me why. And then you have to tell me what phase of the audit we can use. And there's 3 phases of testing. Okay. Risk assessment, test of controls, and substantive procedures. And which phase, you're going to have to tell me which phases might use the evidence. Okay. This is the one that's not in the spreadsheet. You had to do a little bit more digging on this. This is the one that people struggle with. So make sure you take diligent notes on these, because there will be testing on all of this information. All right. Inspection of records and documents. Bennett, you get to start us off. So what is it?
Kind of like auditors reviewing internal and external documents to verify reported balances, transactions, and like events are properly supported.
So it's the accounting records that we're looking at, making sure everything's consistent.
Like
Okay.
contracts, invoices, bank statements.
Good, good. All right. So what types of assertions can this test?
Um,
It's all of them. Yeah, that's why it's such a versatile form of testing. So because it tests all those assertions, and it can be no, we'll get to that. It's the most versatile type. All right, what's the level of reliability on this?
I think high reliability.
All right, let's check it out. Inspection records documents is yellow, which is medium reliability. Okay. So why is this medium reliability? Remember our mnemonic AEIOU. Okay, is inspection records documents are accounting records generated by the auditor. Who are they generated by? The client. So they're going to fall in the I, which is still better than oral evidence, but it's still going to be kind of that medium level. Okay. So medium reliability, which is still good. I'm not saying it's bad assurance. It just means it's not as high as some of our other types of tests. All right. What phase of the audit can this be used in?
I thought it was all of them.
You are correct. It's all phases of the audits. Inspection records documents is our most versatile. It's our most versatile form of evidence that we can gather, because it actually tests all of our assertions, and it tests using in the audit, any phase of the audit, and it's medium reliability. So it's kind of our best overall. It's like if you were a decathlete, you'd be the inspection records and documents. Okay, you just got all that all around her. I guess decathlete's a little bit dated, and maybe a CrossFit if you're in CrossFit. Yeah, a CrossFit athlete. All right. Now we have vouching and tracing. So moving on to vouching. All right. I have to open this up again. Michael, sorry, Ethan, you got vouching.
Yep.
So what is vouching?
This involves like tracing the transaction records like backwards towards source documents. So auditor will select like a journal entry from a book and then verify like from the ledger, and then verify like that transaction with original supporting documents such as like receipts or invoices.
Now, I want to make a quick note of this. It's very, very consistent to do. So Ethan said something and probably unconsciously used the word tracing to describe vouching. Okay. I'm not teasing you about that. I'm just going to say the book does that all the time. Okay. And it will become a fiasco when we do it, because the ACCT and the book both tend to use the term tracing when they actually mean vouching. They will never use vouching when they mean tracing, but they'll use tracing when they mean vouching all the time. Okay, and we have to make sure that those are distinct in our minds. But that's an important takeaway to make. So vouching is a directional test. So it tests one assertion. Which one is it?
Test one assertion.
Uh-huh.
Occurrence.
Yes, existence occurrence. Very good. Okay. What's the reliability?
Is it medium?
Yeah, it's in form of inspection records and documents, so it's going to be medium reliability. It's the same thing. Same reason that we just talked about, because it's going to be based on client generated information. What phase of the audit can we use this?
This one didn't really, I know you use it in test control and substantive procedures, but I didn't know about risk assessment.
Yeah, so it's going to follow the same parameters as of inspection records and documents, so you can use it during all three. So good job. Tracing, Michael, what's the difference between that and vouching?
The other way, it's because it's starting at the bottom,
Mhm.
going to top, which means going to the original like receipts and actual.
So we're trying to make sure something got recorded.
Yes.
So that would mean, what's the assertion?
Uh,
Very good, very good. Directional assertion is the completeness. All right, what's our reliability?
medium.
Yeah, okay. And then what phase of the audit can we use? All three for the same reason. Yeah. Kind of give me what you get to that point, because we've gone through it so many times, but you held up well. So good job. Good job. All right. Moving on, we've got inspection of tangible assets. All right. Andrew, what is inspection of tangible assets?
It's like when the auditor physically examines the assets, like that, counting the cash, looking at the machines, and, whatever asset they're currently looking for.
Yeah. And so that's correct. I do want to clarify that usually inspection of tangible assets will be reserved for really large assets that have finite volumes. That being said, we can physically inspect assets that have smaller ones, especially like inventory, when we want to actually verify a particular assertion, which I'm not going to spoil just yet. But for the most part, it's going to be largely used when we want to test larger assets, frequently, not every single time, but usually. All right, so what assertions can it test?
Test the existence of current.
Any others? You can say no. You can say no, and
Say no.
it's no. Yeah, there's no others. It's just a single assertion. It's like he's missing something. It's like, you wouldn't ask if he didn't. No, sometimes I'm asking to make sure you're certain. Okay. No, it's existence occurrence. That's it. Okay. All right. So what's the reliability level?
High,
Why?
because the auditors themselves are the ones that are verifying.
Good. Okay. So not a versatile test, but it's very high in reliability. Which phase of the audit can it be used?
I put substantive procedures.
Okay.
It's being done at the end, be like, yes, this is a physical thing that exists.
Mhm.
Yeah,
Any others?
no.
Good job. All right. Apologize. Yeah, substantive procedures. That's it. Okay. We didn't talk about any other ones. So very, very good. Okay. Observation, Colin. What is observation?
Auditors, learning like operations, internal controls.
Good, good. All right. What assertions can it test?
Completeness, business occurrence, authorization, and cutoff.
Very good, very good. It's always a question on there. That's kind of a weird series of assertions, but yeah. Completeness, existence, occurrence, authorization, though it's not really an assertion, and cutoff. Yeah, those can be tested there. All right. And let's go to Megan. What is the relative reliability for this? Why? That's right. That's right. If they're being observed, if you know that you're watching them, they're going to say, I'm not going to commit fraud today. Yeah. So yeah, certainly problematic. And what phases of this audit can be used? Any phase of the audit, all three of them. Yeah. Risk assessment, test of controls, and substantive procedures. It's one of our most versatile tests. Okay. Despite the low reliability. Very good. Sadie, what is inquiry?
It is to talk to people on site about these goods.
Good. Okay. What assertions can it test? Very good. Very good. You can get some assertion, some assurance on all the assertion areas by doing inquiry. Very versatile in that regard. That being said, Kate, what's our reliability? Why? People can lie. Okay. Truer words have never been said, ironically enough. People can lie. Okay. So yeah, certainly some low reliability, but what phase of the audit can it be used in? All of them. So it's just like observation. It's very versatile, even if it does require corroboration. So that's why we do have it in our wheelhouse. Confirmation, Doran, what is confirmation?
Audit evidence obtained as a response to an auditor request.
Yes, very good. And so, in response, who do we actually request it from? Are we going to request it from the client? Third party, good, very good. Okay, usually external request. There are rare scenarios that it could be an internal request, but it doesn't happen very often. What assertions can it test?
All of them. But mainly completeness and existence.
Yes, very good. I found my note in the my notes in the spreadsheet. So what is this the case? So confirmation can be used to test all assertions, and they can do it simultaneously. That being said, depending on what it is that we're trying to get assurance about, will be our primary assertion. So remember earlier I was talking about assets, and I said assets generally we want to make sure that assets is going to be existence occurrence, because it's more likely that an organization will overstate their assets. We're talking about liabilities or equities, then it's going to be completeness, because it's more likely they will understate those accounts. That is when we would have the primary assertion assignment. Now, we won't have confirmations used on income statement accounts. So you're going to be focused on whether it's an asset or whether it's going to be a liability in or equity account. Now, trust me, this will become a lot more apparent once we get to the business process areas and start talking about those specific accounts. But that's basically what that's referring to, is that it depends on the account that we're looking at. Okay. Parker, what is the low reliability for confirmation?
Medium.
Medium. Why?
It comes directly from an independent third party, but at the same time, management can influence who they send.
Yeah. So what we're going to find out is there has to be a lot of control over the confirmations, and it can be problematic, especially if the client gets involved. But it is that form of external evidence. It's not quite as high as auditor generated evidence, so we do need to have some control over it. So it is medium reliability. Very good. What phases of the audit can it be used?
Primarily substantive procedures.
Yeah, solely substantive procedures. Okay. What about test of controls? Can confirmation ever be used as a test of control? In this course, no. No. Heck no. Heck no. I could be a little bit more emphatic. In this course, so you may get out to the other world, says I could figure out where area where confirmation will be used as a test of control, but for this course, the answer is always no. Always no, right? Okay. Always no for test of controls. Are you going to be the person who misses that on the exam? Also no. Okay. Also always no. I want a 15 out of 15 on this one. Okay. 15 out of 15 getting this question right. Okay. Recalculation. Grace, what's that? Good. What assertions can it test? Okay. Any others? Good. Very good. Yeah, it's it can only test VAA. But what's the reliability of this particular test?
It's on.
It's very high. Why?
The auditor.
Good. So it's just like it's inspection of tangible assets. We're doing the work, so it's high reliability, but it's very limited in the scope of what it can actually test, the assertion that can test. What phases of the audit can this be used? Anything else? Good. All right. Substantive procedures only. Okay. Substantive procedures only is recalculation. It's a little bit confusing because it's going to be contrasted to reperformance naturally. It's not the same phases that reperformance can be used. Okay. Just keep that in mind. All right. Reperformance. Speaking of which, what is reperformance, Anna?
It's when the auditor executes activities that were originally
Very good. What assertions does it test?
all of them except right.
Yes, all of them except rights and obligations, which seems really weird, but keep in mind, reperformance is trying to reperformance tasks and events that the organization is performing. It's not about testing account balances. Okay, so that's why it's not rights and obligations. So, reperformance, Josh, what is our level of reliability? High. Why is that?
The auditors are actually creating this evidence.
That's right. So auditor creating the evidence, so it's going to be high reliability. What is our what phase of the audit can it be used?
Is it standard procedures and then test control?
Yes. So, okay, please make a note of this. Okay, it can be used during substantive procedures. However, it is almost exclusively used during test of controls. There are times that it will be used during substantive procedures, but we almost always use this as test of controls. It's one of the primary methods of evidence in test of controls. So it's a very, very powerful test in that area. We got one more, analytical procedures. Tommy, what's that? And just like we talked about. Okay, this is a weird one. What are the assertions that it tests? VAA and completeness. Make a note of this. About 90% of the time it will be VAA. About 10% of the time it will be completeness. Will you encounter scenarios that it will be completeness? The answer is yes. I can think of at least one in this course. Okay. We'll talk about why that's going on later. We'll come back to this and say, remember, I said that this was going to happen. Okay. But VAA completeness. Alex, what's the level of reliability here? Medium, why?
Because the evidence is correct.
Yeah, so we're actually using client-generated evidence. Even though the auditor's performing the task, we have to rely on client to provide evidence for us. And what phase of the audit can we use this during?
Risk assessment and substandard.
Slam dunk, didn't say test of controls. Yeah, risk assessment, because preliminary analytical procedures and substantive testing, substantive analytical procedures. Well done, everybody. I don't think there were any misses here, so fantastic job, and I will see you all on Friday for homework.